A lot of people say, I stay away from crypto because it's too risky. But here's the real question. What if not owning crypto is actually the bigger risk? We live in a strange time. You work harder than you did last year, yet somehow your money feels smaller. Your salary goes up a little, but prices rise even faster. Gas prices rise, food prices rise, living costs rise, and your savings stay still. People think keeping money in a bank account is the safest decision, but the truth is, money sitting still slowly loses its value over time. That's called inflation. Your money doesn't disappear physically, but its purchasing power quietly fades away. Data from the U.S. Bureau of Labor Statistics showed inflation still remained around 2.4% to 3.3% during early 2026, depending on the measurement period. In simple terms, $100 today will not buy the same things a few years from now. So the question is no longer, am I willing to take risks? The real question is, can I afford to watch my money lose value forever? And this is where many people begin looking at new types of assets, not because they love speculation, but because they realize doing nothing also has a cost. People once laughed at the internet. They said it was just a temporary trend. Today, the internet became the foundation of the modern world. People once underestimated Amazon. They said it was overpriced. They said the business model made no sense. Today, many people can only say, I wish I started earlier. The same thing happened with Bitcoin. People called it a scam. People called it a bubble. People said it would die. But now, it's no longer just retail investors paying attention. The world's largest financial institutions are entering the space. And this is not opinion. This is fact. BlackRock, the largest asset manager in the world, now operates a Bitcoin ETF called IBIT. By April 2026, the fund had already grown to nearly $59 billion in assets. Not 59 million, 59 billion. And that's only one product. What does that mean? It means the biggest players are no longer asking, is crypto real? They've already moved in. Now they're asking, how much exposure makes sense? And this is where small investors often fall behind. They wait for perfect certainty. But markets don't reward the people who feel the safest. Markets reward the people who learn early. Many people only want to enter once everything feels safe. But by the time something feels completely safe, the biggest opportunity is often already gone. The biggest danger isn't losing money in crypto. The biggest danger is losing time while the world changes without you. Because history rarely gives the same opportunity twice. And maybe, what hurts most in the future won't be losses. It will be regret. Regret from seeing an opportunity and waiting too long to act. Financial advisor Rick Edelman once shared a very simple but powerful idea. The question is not, is crypto dangerous? The real question is, how much crypto allocation makes sense in a portfolio? That's a completely different way of thinking. Most people look at crypto like gambling. Go all in, get rich overnight. But serious investors don't think like that. They think about diversification. Just like stocks, bonds, gold, and real estate, crypto is now being viewed by many as a new asset class. Not for going all in, not for betting your entire future, but as a small part of a portfolio that could create meaningful long-term impact. Even a small allocation, maybe 1% to 5%, can significantly change long-term portfolio performance. Why? Because the upside potential is extremely large, while the exposure remains controlled. That's investment logic, not blind FOMO, but intelligent risk management. Ironically, many people feel safe because they don't own crypto. but they forget one important thing. Not investing is also an investment decision, and that decision carries risk too. The risk of missing opportunity, the risk of falling behind, the risk of becoming a spectator while the financial system evolves. Today, we already see major institutions, major ETFs, and major financial firms entering this space. BlackRock now officially offers Bitcoin and Ethereum exposure through traditional brokerage access, making digital assets easier for institutional investors to buy than ever before. This is no longer some internet forum experiment. This has already entered Wall Street, and history always follows the same pattern. First, people laugh at it, then they reject it, then they fight it, and eventually, they accept it. The problem is, most people only believe in something during the final stage, when prices are already high, when the greatest opportunities are already gone, when all that remains is regret. 5 years from now, there will be two kinds of people. The first group will say, "I actually knew about Bitcoin years ago, but they never started." The second group may not be perfect. Maybe they made mistakes. Maybe they lost money at times. But they learned. They started. They took action. And today, they own assets, experience, and time that can never be bought back. The difference was only one small thing. Not huge capital, not luck, but the courage to start learning early. So, if today you still say, "I'll wait until I'm more certain," remember this. Markets don't wait. Technology doesn't wait. Change doesn't wait. And time is the most expensive asset you can never buy back. Because in the end, the biggest risk is not investing incorrectly. The biggest risk is realizing too late that the world already changed. And maybe the most expensive sentence in life is not, "I lost money," but, "I wish I had started earlier."